All right, so crypto crash 2022, as some people are saying, is here. I would more call it a pullback and something that we see, but with every year comes hundreds and thousands, if not hundreds of thousands, of new investors in the crypto space. So if you're new here, welcome. If you are not, welcome back. You should know what this is. We're talking pure technical analysis with no emotions tied. Now, my trading setup may look a little bit different from what you use, especially when you start digging into the RSI. Well, he's only using one line. Why is that? Well, I have a full trading view setup video, should be in the card above right now, for anyone wondering how you can get this exact setup on your system without paying anything. It's a free thing. I'm not affiliated. I don't get anything from doing that, but that card is up there if you want to know how to set this up. So right now, first off, we're looking at ETH, then we will look at Bitcoin and potentially one other. I've been looking a lot into Algorand lately, as that big player putting $250 million into it, saying he thinks it could, and this is Scaramucci, saying he thinks that Algorand market cap could be passing Ethereum at some point in time. And there's a few reasons why he said that. One, he said, or compared to rather Algorand being the Google of blockchain, but that's a video all in it of itself. So we are looking at the 1 day time frame candlesticks for Ethereum. 1 day time frame meaning each one of these candlesticks is 1 day of price action. Of course, the bull's pushing it up, the bear's dragging down, and after 1 day or 24 hours you have a fully printed candle. So yes, this does look pretty bad right now. Now, there's a few things you could say. Yes, the RSI is at a low point right around 23. I would say it is under 50, which means that is a bearish scenario in my books. You could say, yes, the red volume here is slowing up, but I would tell you that we can still see a drop, right? You have somewhat of a dead cat bounce on each one of these pivot points, right? So let's actually dig a little bit deeper. We're going to use a Fibonacci retracement. Now, for anyone that doesn't know that, I do have a video specifically explaining the Fibonacci retracement, but for time's sake and on this video, what we are doing is essentially taking the lowest point of this run-up and the highest point where it peaked out, and we are throwing this graph on it. Now, something really interesting, you'll notice at the 78% retracement, we have seen a little bit of a bounce. And you say, well, we have also seen that at the 38, we saw that at the 61%, so now we are seeing it at the 78. Yes, that is true, but the bullish case, right, so not emotionally, purely technically, we're going to talk about the bullish and the bearish case. So in favor of the bulls, we are bouncing off of a pivot point on the Fibonacci at this 78% retracement at 2369. Yeah, I know we're right above that right now. However, this time you'll notice it does look like we are at a very low point on the RSI, the stochastic, and we may be angling up on the MACD. Now, if anybody sees, I use an 821 MACD, a little bit different than the majority, but it's what works for me, right? Setting up your trading setup is really about what works for you. So we do have a case for the bulls that we are at a low point, and we also actually do have a bit of a divergence. If I grab a trend line, you will notice, and where is that here? We are on the 1 day. So if you notice here, between here and here on the price action, we do have a higher low. However, if we look at the RSI in that same time frame, we are actually a little bit lower, right? So we have this bullish divergence that has formed, that has not formed, right? Because here, higher price action, but higher on the RSI as well. This is the first time in this setup we have actually seen a bullish divergence happen between the price action and our Wilder's index, or relative strength index, RSI, whatever you would like to call it. Now, on the other end, the case for the bears, we did actually for a moment break below this 78%, and let me actually remove this line right here. We did actually break below that 78%, which means we could see a continuance lower. If we do see a continuance lower, we do not have support until we get down here at this 1686 level, where we did actually have a double bottom. If I remove that here and go with a straight horizontal line, right about here we had this double, if not triple, that's kind of a triple bottom there, if you would like to say. And if you go all the way back, you could say, well, we have strong support here with 4 points touching, right? But that is all the way down actually at 1723, between 1680 and 1720, which means we could have a lot farther to fall. Matter of fact, we could have about 20% more to fall. Now, this is not financial advice, but if I am looking to enter into more Ethereum, I am going to be looking for something along a little bit of a dead cat bounce here, and then a continuation down to 1723. That is what I think is most likely. That is not, of course, a guarantee. You should never base your financial decisions on what you hear on social media. So that is Ethereum. Let's go ahead and get on to Bitcoin. Alrighty, so Bitcoin looking exactly the same. Now, a lot of these charts, they do run together, right? Pairs run together. Ethereum's going to print somewhat the same as Bitcoin, same as XRP, ALGO, unless you have some extra factors, some sort of news that comes out, or some sort of new utility, fork, or branch that comes out. Usually most of these charts all run together. So we're not going to take as long on this, but we will quickly throw a Fibonacci on there, and we will use a horizontal line for this bottom here. So how far can Bitcoin go down? And if I was looking for a buying opportunity, where would I be looking? Well, I would, unfortunately, and this is low, a lot of people are going to hate this, but like I said, if you come into trading with emotions, you're most likely going to lose. And that's just what it is. You cannot trade with emotions. So just looking at technicals, I would say we have somewhat of a little dead cat bounce here before we head on down to the 29,044 mark. Now you say, well, do you still have that bullish divergence between the price action and the RSI? I would say yes, you do. You have somewhat of a higher low right here represented in that line, and you have a lower low on the RSI, kind of this pressure building or momentum building coming into it. Okay, so if I was looking to buy or add on to my Bitcoin bags, I'd be looking right around the $29,000 to $29,200 mark. Again, not financial advice. Don't listen to random internet social media people. This is purely technical from my years of experience trading technical charts. So, and there's a lot of videos and tutorials. If you want to learn more about technicals on this channel, feel free to stalk them. So essentially that is my price target on Bitcoin for now. This can definitely change, as crypto is a very volatile space, ever evolving. If you've been in it for more than 24 hours, then you know how fast things can change. So we're going to look at one more. We're going to look at Algorand. So I'm going to go ahead and pull that up here, Algorand, and our chart is going to look fairly similar. Let me go ahead and scroll in here. So let's go ahead and quickly set up our Fibonacci. Now we're not going to use this line right here. That would be a bit extensive. That would either be a bug on TradingView or a massive whale using a bot to pump and dump. If you don't know about that, something to look into. You can get bots that will buy and sell for you and basically pump the price up, sell it, bring the price down, and you get one of these wonky looking hammer candlesticks. So we see again that we are at a Fibonacci retracement, this time not the 78, we are at a 100% retracement. That means everything we have gained since the 18th of August or middle of August has been gained and subsequently has been lost. We have a lot lower pressure on this as well, which means if you're looking to play anything, Bitcoin and ETH would probably be your better bet, right? Or not better bet, this would be a better bet than those two because you've been at a lower stochastic, a lower wilds, a lower MACD for a longer time, and you see that people seem to be more interested in buying algo right now than they are in buying Bitcoin and ETH. That is just a market sentiment. That is not my idea or my sentiment. But right now, I would not be looking for algo to go any lower. If we see any separation or price deviation where the general market is going lower and a certain asset is going higher, we saw this with API3, we saw this with Ribbon Finance, we've been seeing this with a few different spots in the crypto market. But I would say personally, again, not financial advice, I think the safest right now, if you're looking to buy the dip out of these three, would be Algorand, as it doesn't look like it has much lower to go as far as dipping into what we've done this year. Now, if we see a straight up bear market, then the sky, or rather the infinite floor, is the limit, and we will talk about that if it goes lower. So make sure to subscribe to get the newest information. As always, leave a comment down below, stay profitable, don't get bit by the FOMO, and keep hustling.